Hello, Rental Roundtable listeners. For today's episode, number 48, we had on Rebecca Warnick. She's the principal and owner of the Warnick Group. They are a CPA that only works with rental companies. That's all they do. I think they're the only CPA in the industry that only works with rental companies. So the whole episode was one topic. Wait, what are the 5 red flags that are costing rental businesses thousands of dollars? So we went through each of those in detail. Really great episode. If you're really thinking about how do we grow to the next level and what metrics should we be thinking about, how do we use finance and accounting to really understand how our business is performing to move to the next level, this is the episode for you with Rebecca. Hope you guys enjoy. It's very fun. Everyone, welcome to the Rental Roundtable, episode number 48. We have Rebecca Warnick on today. Rebecca, welcome to the show.
Thanks for having me, Kyle.
Yes, very excited for this episode. So you're CPA and you're the founder and principal at the Warnick Group, who specializes in finance and accounting services for equipment rental companies. So this is a finance episode. We're going to get into some details here. I'm excited for this one. And again, excited to have you on. And I'm sorry I didn't get to meet you at the ARA show. So you were at CRA, you met some of the Quipli team and at the ARA show. And I think you were outdoors for the ARA show, right? So how was that? Was it cold?
No, it was fabulous. You know what? I think because I was outside. I think the weather was better outside than indoors. It was 60 degrees every day. Put on a little sunscreen and just hang out. I enjoyed it. It was lovely, but it was just hilarious to be outdoors as like a little CPA firm out with like the big equipment guys.
Yes, I think the accountants, CPA should be indoors, but that's the same with the software companies as well. But let's keep us indoors, away from the heavy machinery. And you live in Las Vegas area, is that right?
I do, yeah. So ARA was super convenient for us, because I live about 15 minutes from where the show was. So yeah, believe it or not, people live in Vegas, not on the strip. It's a whole thing, but yeah, we really enjoy it here.
Yeah. Have you been to the Sphere yet? Have you gotten to check that out?
Yes, we saw you two there when they first opened. How amazing. Yeah, definitely. If a trip to Vegas is on your agenda, make sure you go to the strip or to the Sphere. It doesn't disappoint. It's really cool.
Yeah. I didn't get to go in January, a little overwhelmed with stuff, but next trip. And good for you, right? You get to just drive down the street for the ARA show. Didn't have to get a hotel, didn't have to travel. Sort of nice. And you had CRA in Vegas as well. So
Yeah.
a good sort of setup for you. Well, I'd love to hear about your background and history. Like, obviously, you've been at the Warnick Group, founder of that, over 10 years, and been working with rental companies. Tell me about your background, how you first got into being in accounting and finance, and then particularly how you got to starting the Warnick Group and specializing with equipment rental companies.
Yeah. The way I got into accounting was I had some older siblings that graduated like in 2000, about the time of the tech bubble. And I had a brother who graduated in a communications degree and couldn't get a job after he had a college degree. And I was like, okay, I don't want that to happen to me. So that's how I went into accounting. Was I wanted to make sure that I could always have a job and be employed. And that's still true today, 20 years later. Like, it's not hard to find a job as an accountant, which I think is fantastic. But specifically, the way I got into the rental industry was early on in my career. I used to do tax returns for some of these rental companies. And we had here in Vegas, we had Ahern Rentals was huge, right? They were everywhere. They were on every corner, and they did equipment rental. And then they ended up, so I, worked with them. I did some of their audit stuff back in the day and always found it fascinating. And worked with a couple other local companies here. And then, we wanted to really focus in on a particular industry so that we could provide better value to them, right? Like, my goal, my parents had a couple small businesses that weren't successful. And so my goal is just to help more business owners be successful. And particularly in the rental industry, it's such a complicated business, whether you've got even the event side, which I feel like takes it up another level because of the quick turnaround of goods and stuff, or, on the equipment side, in addition to just regular business things, like you have equipment that breaks down that you have to address how to fix. And so the complexity of the rental store industry is just, it makes it fun for me, right? Because it's super complicated, but we also can really help, these business owners who can, sometimes maybe struggle or whatever. And so that's what we love to do, is just help rental stores earn more and keep more of the money that they earn.
So you first got connected. So accounting background, right? I think there still is a shortage of accounting jobs, right? So like, it is a job that we need. And then you start working with Ahern, obviously the big group based out of Las Vegas. What led you to starting the Warnick Group and going out on your own and building your own company?
Yeah. So, okay, so I mentioned my parents had those two failed businesses, right? So I'm like, okay, I always want to be a W-2 employee, like I want somebody
Yeah,
else cashing my check
yeah.
and things like that. And in Vegas in particularly, but across the country in like 2007, 8, 9,
Hmm.
like we had real problems, and the economy was tough. So I actually got laid off and happened to be pregnant with my first child. And so it was like,
Hmm.
okay, what am I going to do now? And like sometimes when you need to do something and you get pushed off the cliff, like it's something that you're meant to do in life, but like you're too scared to do it. Um,
Hmm.
like getting laid off with all the downturn of the economy, like pushed me off the cliff into starting my firm. And I absolutely love it. Like such a blessing in life. I love having my firm. It's been a fantastic journey, but if I didn't have that experience, I don't know if I ever would have done it.
Mm. That's so interesting. It's interesting. Like you saw your family with the small businesses that didn't work out. You went to the safe W-2 job and realized, well, it actually isn't as safe, and maybe not. Like I don't know, maybe it is safer to run your own company. I had a similar experience because I was at Uber and when the pandemic happened, and our Uber's revenue went down by 90% overnight. Our team of five, me and our team of five, we're spending over $1 billion a year on driver promotions, and that went to zero overnight because we didn't need any
Wow.
more drivers on the road. There were no riders, and everyone didn't have a job, so more people were becoming Uber drivers. So I was laid off, and I started Quipli after that, right? So like I think I had a similar experience where like the safe big company W-2 job maybe isn't as safe as you think it is, and at least with running your own company, you get to see the numbers. You know exactly what's going on, and it puts the onus on yourself to be successful. Right?
Yeah, it does. I mean, it's scary as hell, right? Because like
Yeah.
you have people's livelihood depending on you, but it's
Mm.
so rewarding and such an incredible experience. And I never thought about that the W-2 thing wasn't as safe. Like I've never looked back at that and thought that way, but that's a good point. If somebody else had control over my paycheck instead of me. And I think you probably experienced this, but when you work for your own business, you work so much harder than you would for somebody else, right? Because you get
Hmm.
that benefit back for yourself. So I, kill it in my business and work really hard, but it comes to me. And so I'm happy to do it.
Yeah, it doesn't feel like work. It's your baby, right?
Yeah.
And I think also, at least I'm more in the tech world, but like layoffs have become more common, and like it used to be like a four-letter word. Now it's like every year companies do it, and it's just a way to. And it becomes like I think it's becoming more and more accepted that like I think the W-2 jobs actually, if anything, are becoming less safe. And good news is for our listeners, a lot of them are independent rental company general managers or owners, so they very well understand the entrepreneurship appeal that we're talking about here.
Yeah.
So I want to kind of jump into the main topic for today, right? Which is the top 5 financial red flags that cost rental businesses thousands. I've got a sneak peek of this. Thank you. So I sort of know what's coming, but I think this is super relevant. There's a lot of topics we can talk about today, but you have worked with many rental companies over the last 10 plus years. The idea that history doesn't repeat itself, but it often rhymes. You can kind of see the playbook playing out here a little bit. Tell me about some of the red flags that rental businesses need to be thinking about.
Yeah, yeah. So the first one, I call it bank account bookkeeping. So you get so busy in the business running it right. You're making sure that your team is getting those rentals out on time, that your sales team is booking those orders and all of that, and your head's down in the business that you don't have or don't take the time to like look at the numbers and what's going on in the business. The only way you know if the business is doing okay or not is by how much money is in your bank account. And everybody
Mm-hmm.
has that number, right? Where they're like, okay, if I'm above, X number, I'm feeling good. Like everything's fine. We're doing well. And if I'm below, that number, like, oh crap, I've got to freak out.
Mm-hmm.
But you can't just look at what's in your bank account because there's so much more that is out there, for information on how feedback of the business is doing. And look, if you look at your bank account on, the first, and maybe you'll have a $20,000 payment that comes out on the third, had you looked at your bank account on the fourth, you're going to think about things differently than you did on the first. It's really, like I think it's super important for business owners to take a minute to pop their head up and like look around, right? Take a step back, see what's going on, and do more than just looking in your bank account to see how much money you have.
Mm. So do you find that's like a pretty common thing then? People sort of just I don't know, once a week, once a month, check at the bank account and they're like, life is great or life is terrible. And they sort of don't really understand what's actually happening in the business. They're just looking at the single dollar amount in their bank account. That's how they're running their business. Am I hearing you right?
Yeah, yeah. I think it happens a lot of times, right? Like
Mm,
I was chatting with a business owner the other day and she was like, "Oh no, I look at my numbers every week." And I was like, "Every week?" I was amazed. Nobody
yeah.
looks at it. I don't even look at my own business every week. Look, but like at least do a monthly thing, like
Mm,
take a step back, look at the things on a monthly basis and look deeper than just what your bank account is saying, like particularly I think on the equipment side, you need to know when those big payments are coming out for the things that you're purchasing and all of that.
mm,
So just make sure that when you're, analyzing or understanding how the business is doing, that you are taking some time to look at the numbers and what, like various software like Quipli's got some great utilization reports and different things that you can look at. And so there's a lot of data out there. Just make sure that maybe you block out an hour once a month to actually like look at it.
mm. Yeah. So I was going to ask, what's the anecdote to this, right? So if what you shouldn't be doing, the red flag is to just once a month look at your cash in your bank account and run your business on gut feel in a sense. What should they be doing? Once a month, book an hour? What are some of the metrics they should be thinking about?
Yeah, so we look at like a few things, as the accounting firm, right? So you've got this report called the profit and loss. And so that's all the money coming in and going out, right? So it's your income. So everything from like sales and rentals and then the expenses. You're going to have like your payroll and rent and all of that stuff.
Hmm.
So that gives you a snapshot of like what's going on. And then at the bottom of that one is going to be what's called your net income, right? And so that's like what's left over after everything is paid. So that's a key number. You should be keeping an eye on that, right? And hopefully it's always saying net income. If you're not bringing in enough, you could get to a net loss scenario, which can be tough. And then you have in the accounting world, you have the balance sheet, right? So that's everything that you own and that you owe. So that one is going to be really critical to see. Look, it is going to say what your bank account balance is on a particular date, but it's also going to show you like, okay, I have, $1.2 million worth of rental assets. So you're going to see that, but then you also see what are the payments that you have to make on those payments, So how
Hmm.
much do you own or how much do you owe for those vendors for all the equipment that you bought? And then that one kind of gives you a bottom number too. And it's like, okay, after everything's said and done, here's what's left over. And we call that retained earnings. But so I would look at those, hopefully you've got somebody doing the bookkeeping for you or someplace to look at that. And then the last one that I would look at is called cash flow. So that kind of keeps track of actually how the cash is flowing through the business. And the bottom of that one is going to say, it's going to say either a positive number or a negative number. And a positive number is great, right? Because it means that we're building up cash in the business. We're going to be able to pay our bills later on. But a negative number means that you're using cash, right? And if it's a big negative number, you could be hemorrhaging cash, which can be really scary because if you run out of cash, you can't pay your bills. So I think that that's a really important one to look at too, beyond just the bank account, is like make sure that we want that cash flow number to be positive because we want the business to be funding itself and not have like you have to keep putting money in.
Hmm. So profit and loss, balance sheet, cash flow. I question for you as at the Warnick Group, like where do you typically engage rental companies? Are you supplementing like if you, are you working with rental companies who don't have an accountant on staff and you're doing the month end close, you're doing everything, or maybe or are you working with groups who maybe have in-house accounting person and you're coaching them and taking it to the next level, helping them understand these more complex financial models?
Yeah, the latter. So most of our clients have somebody, sometimes it's the business owner or a family member or whatever that's
Mm-hmm.
doing like the day-to-day kind
Mm-hmm.
of bookkeeping. And then we come in and we support them, right? So, because look, these people aren't like accountants by trade, they're gonna buy that new equipment and they've got that piece of debt and all of that, and they're like, oh, I don't know what to do with this. And so we
Yeah.
come in and help them record that into their books and into their accounting record. So we're really our favorite thing is to really support these business owners and their in-house bookkeeper or external bookkeeper And that's our favorite kind of relationship.
Mm. So for the rental company going to the next level or aspiring to go to the next level, you should still have your day-to-day person doing payroll, making sure your AR is on track, et cetera. What you guys offer is taking all of the day-to-day stuff happening and summarizing it at a bigger view. And typically,
Yeah.
I imagine monthly, right? Looking at the P&L, balance sheet, cash flow together, that tells a story for the owner to understand how the business is really performing.
Yeah. And then we do take it one step further, right? Because look, I get rental store owners are not accounting people, right? They're not finance people. They don't love accounting and taxes like I do. So we take those 3 reports that we were just talking about and we send them a video. I call it an insights video.
Mm,
So because you may print those out of your accounting system or whatever and be like, I don't understand what it's saying. And so what we do for our clients is I walk through those reports and explain to them because otherwise it is a bunch of numbers on a page, right? It
mhm,
can be confusing. And so I explain to them like, hey, your revenue went up, but your cost of goods sold went up faster, or we need to keep an eye on labor, or, we've got these big equipment payments that are coming up. So not just having those reports and trying to look at it, but really understanding and digesting them. And so we try to make it easier for our clients because it can be tricky to understand.
Yeah, for sure. I mean, I can resonate with that. At Quipli, we have a full-time finance manager who's doing the thousand things, flying around every day, like new customers and payroll and expenses and like plenty to do. Right? Then we have someone who once a month does our uh, month-end close, and we have a 30-minute call with them, and we kind of go through and they tell the story of what's happening for the business. For me, right? Because
Yeah.
I love accounting. I really do. But at the same time, that's not what I really love to do every day. So it helps me as the owner know that like, look, I got someone tracking everything day to day, but like I need to see at a bigger level what's the story happening, how's the business really performing, and that is like the role that you play. So I personally
Yeah.
find value in that for our company.
Yeah.
So that's the first mistake, right? Which is bank account uh, bookkeeping, right? Just looking at the money in your bank account and running your business that way. That's not the way to do it, right? We talked about how do you resolve that. What's another mistake that rental companies make?
So, kind of along the same lines, right? You get so busy in the business that you don't really take a step back to look at things. So, you're not looking at a red flag is not looking at which items are the most profitable for you. What rental items are making you the most money? And this is something that I really love about the Quiply software because it makes it very, very easy to see it. You guys have this amazing dashboard that's very straightforward. But look, if we have, a certain skid steer or whatever or a ditch witch or whatever that's making a ton of money and we're having, extra requests for that equipment, let's buy that one. Maybe we
Mm,
don't buy, the scissor lift or whatever that doesn't get used that often. Take a look at what are the things that are going out well, have a good uptime, are frequently requested, and are making you good money. And let's lean into those.
mm. So it's the people are not looking at their assets in particular. They're sort of looking at the whole business, right? What are the metrics that at a unit level or category level that rental companies should be looking at?
Yeah, so there's a lot that goes into it, and it depends on the equipment piece, right? Like something that requires regular maintenance on maybe the construction side, ideally you want to incorporate that cost in there too so that you truly know how much that is, and maybe it's something that also uses like fuel or an electric vehicle that uses power. Make sure that you've got kind of all of those numbers going in. On the event side, it might be a little bit more simple because like you have a table and you don't have a lot of extra costs that are going to go into that.
Hmm.
But make sure that it's not just how often it's renting and what it's renting for, but like a really expensive piece of equipment, you've got the debt that you're paying, you're probably paying some interest, and
Hmm.
then like the repairs and things that we were talking about. So it's not just how often it's renting and the price that it's renting for, but you also need to incorporate in like the costs of that equipment and make sure that you're looking at the full thing, right? Because you might be like, oh, this thing will rent for $10,000 a week. Yes, it will, but
Hmm.
there's other things beyond just that rental booking.
Mm. Yeah, so some of the data that we hear about, right? You have time utilization, you have dollar utilization. Those don't have a cost element really, except for the initial equipment cost, right? And then there's a combined utilization, which is you add those together. Maybe you want to be around 120, 130%, right? That but that doesn't incorporate the cost side, right? So we also have like annualized ROI numbers, which take into account the service cost, the fuel cost, and you have to look at all these together, right? Because if you just look at one metric, like we talked about earlier with the different accounts, if you just look at cash flow, that's interesting, but it doesn't tell the whole story. You have to look at the three different reports. And I think on the metrics too, it's the utilization reports. It's also the annualized ROI reports together. The other thing I think is also important is like sort of some of the data that Rouse Analytics provides, right? Where you can see how your utilization metrics compare to your competitors in your area, right? And how do your prices compare to competitors in your area? So, it's not just one button, like here's the one metric and it tells you exactly what to do, but it's several of these things together. Is that your view
Yeah,
too?
yeah, exactly. And one other I wanted to mention too is like think about the space that that item is taking up or items, right? So,
Mm,
um, whether it's indoor storage or outdoor storage, that's going to be another one that's maybe a little bit harder. Like the number's not super easily readily available. You might have to go run that down or whatever. But let's say, for example, on the event side, you have a chair, a set of chairs that used to be really popular and now it's never renting. Let's look at maybe getting rid of some of that stuff and
mm,
freeing up space, or
mm.
these days I think for equipment you can resell it for a decent price. So if you do have something that's not in that most profitable thing, maybe let's look at moving it out.
Yeah, that's an interesting point you're making. Is like there's a hidden cost here, right? Because if you're paying for a warehouse and you've got a bunch of chairs taking up half the warehouse, you're like, oh, I don't have any maintenance costs on my chairs, right? It's a great ROI. It's like, well, correct, but if you're also paying for real estate for in downtown Las Vegas, wherever you are, right? How do owners incorporate some of those hidden costs, right? Because I imagine that's a little bit harder to put in a spreadsheet.
Yeah, I mean, it depends on how deep you want to go, right? But if you really love getting into the data and all of that stuff, I mean, you can break your rent down by square footage, indoor and outdoor, and all
Hmm.
of that. It is certainly possible. I love though that you were talking about, like the Ralph Analytics and you spit off, I think six different things that Quipli will look at the numbers for you, right? And they were all different acronyms of ROI
Yeah.
and utilization and all of those things. And so you can, and look, this part, if you want to get really, really nitty gritty into the numbers, it's probably going to take some time.
Yeah.
But, if you just start high level, just look at
Yeah.
some numbers. And then if
Hmm.
you're like, ooh, I love the numbers and want to go deeper, you can. Like, I don't think it's a mandatory thing, but look at the first high level numbers that are available for you. And then you can decide where you want to go from there.
Yeah. Yeah, we're talking about like biggest red flags, right? So one of the red flags is you don't look at an asset level how they're performing. Yeah, you
Yeah.
could go data science level here, but like there's some element. Just like look at each asset over once a quarter and see how they're performing,
Yeah.
what's your utilization, what your cost. The other thing, this is a separate topic, but something that we've been hearing from groups is, like what you talk about, these rental company owners have 1,000 things going on and they love to get in the data, but they don't have the time. Like I think one thing long term, I don't know when this is 1, 3, 5, 10 years out, your rental software, whoever it is, has all this data. Like, what if it could just summarize and say, here are your three worst performing assets. We've looked at 10 different data points. Here are your three best. You should sell these two. You should buy two of these, and you should raise your price here, right? Like,
Yeah.
and I think there's a role for AI and some of that, like later on. This is something that groups have been asking about, but that's more advanced level that I don't think it exists in the market today. But I think that's sort of where this can go because I totally agree. Like you have to look at each asset and how they're performing. And it does take a lot of time to do that, right? But if there's a system or a brain that could do some of that work for you, I think that could be pretty compelling.
Yeah, and I'm excited to see where the rental industry goes, in the future. I think adding AI or any other tool that can help you really look at the numbers will be such a benefit to business owners, right? Because the whole goal is just to help your business be more successful. So if you've got some sort of computer or whatever, something that's crunching the data and the numbers for you, and then you just get to look at the high level stuff, like how cool is that? I can't wait for
Yeah.
for that day. I'm excited to see what's coming down the
Yeah.
pipe.
But the industry wants it like that. People are asking
Yeah.
for that, right? So I think it's a matter of time before someone delivers that. So,
Yeah.
um, what are some other red flags? We talked about bank account bookkeeping, number one. Number two, not looking at which items are making you the most money. What's another red flag?
I wanted to add one more thing really quick if I
Yeah,
can.
sure.
Um, when looking at those numbers of what rents well, that should help guide your decision of what to buy. right? So
Mm.
don't just go to ARA and see all of the shiny things and whoever's doing the best deal. Make sure that before you go to a show like that, that you know what's really working well for you and help that guide your buying decisions. Because we don't want to get in a trap of, buying something that's not going to be great for you.
Yeah. Well, that's what happens when I go to Costco. If I don't have a list, I end up buying like a kayak, like like I'm going for bananas and rotisserie chicken and some milk. And if I do that, I'm on track. But if you kind of go in, you're like, oh, let's just see what can get. Like, that doesn't
Literally, I
always.
did that last weekend. Yeah, it was like a $650 bill. Me and the three kids were having a great time at
Yeah.
Costco.
We bought a blow up $400 and like water slide that we ended up not installing because it would have been, we ended up returning. I was like, we didn't need this. So buyer's remorse, right? Go to the ARA show with a plan ahead of time of what
Yeah,
performs well so you don't get distracted.
yeah.
It's a great point. Yeah. What's number three? What's another red flag?
So, not raising your prices is the third red flag, right? So, kind of same thing again, right? You're just in the business, you're doing the thing, your prices are where they've been. And even you've probably got some handshake deals with like this certain, customer gets this price or whatever. But if you don't sit back, look, your costs are going to go up every year. Your rent goes up, your software cost goes up, fuel costs goes up. You have to keep paying your employees more, the more taxes go up, all of the things, right? And so we need to incorporate that into our business to continue to be successful. But I think more important than that, though, is I think the key is raise your price every year. Just a little bit. It doesn't have to be, something crazy like 50% or anything, but if you can do maybe a small amount each year, it's going to be a lot more palatable for your customers versus like, oh, I didn't take the time to look at anything, so I haven't raised my price for the last 5 years. Now I've got to catch up and it's this huge jump, right? So if
Mm-hmm.
you just do like little bits at a time every year, then I think it's going to be a lot easier than trying to make that catch up.
Mm. Oh, costs going up as everyone feels, right? You're saying you have to incorporate that into your pricing. You're saying once a year. And how do you know what percentage to increase? And do you do it across the board, like 3 to 5% on every item, or do you distribute it based on performance of assets? How do you think about that?
Yeah. I mean, ideally in a perfect world, if you had a bunch of data, right, we could
Mm-hmm.
do it great. One of the things that could really help though is take a look and see what your competitors are charging. Do they have prices listed on their website, or can you do a little covert phone call and like get some idea of where their pricing is at? I think that that's something helpful. Ideally, like if you ever hear from your customers like, hey, I didn't get this job because of price, and that's something that you do want to consider. I mean, we don't generally recommend that rental stores compete on low price unless that's for sure your specialty, right? I think for a lot of rental stores, it's so much more about the customer service. So you don't necessarily have to be the lowest price out there, but if everybody else is charging, $1,000 and you're charging 500, and, maybe there's some room to grow there.
Mm. And I would actually say, like, it is a bad idea for the majority of rental companies to try to be the low cost leader because you don't have the scale to do that. And that's just a race to the bottom. Like, that is not
Yeah.
good business. I would say that's not good business practice, right? So,
Yeah.
and if you are going lower in price, that means you're probably compensating for something else going wrong, right? You either don't have great equipment, you haven't figured out your messaging to the market, you don't have great employees, right? So if you are having to lower your price, like it's probably covering up something else happening, right?
Yeah.
Um, and it's interesting, like looking at your competitors. That's sort of like a tool like Rouse would provide, right? Like, it's a separate service you'd have to pay for with Rouse, but that's what they do is uh, they look at your individual category classes and they aggregate. If you have at least 5 competitors in your market, they will say you're in the 70th percentile on utilization, you're in the 40th percentile on price. So that actually is a really granular analytical way to look at how you're comparing. If you don't want to pay for that, right, you can always go call your competitors and see what the price is, right? That's the and maybe you should do both, right? And how, like, so you're saying once a year, is that typically best to do in like the slow season? So it's wintertime, January, let's see how the year went, then raise the prices? Or like, is there a better or worse time to raise prices?
Yeah, I would say the slow season is the best, right? Because during the slow season, you should be doing projects, things
Yeah.
that you don't have time or bandwidth to deal with other times of year. Plus, too, you might not have, there may be a time period where you have bookings under the old price and bookings under the new price, and that can cause some confusion. So
Mm-hmm.
if we're doing this maybe early on in the slow season, you'll have more time to look at it and really attack it. We don't want to just kind of willy-nilly just start writing things down and changing things
Yeah.
like on the fly during your peak season without having a chance to take and depending on how many assets you get, it's gonna be a bit of a project, right? It's gonna take more than just a few hours to really look at it. But year one's gonna be the hardest. Year two is gonna be the easiest. And I think too, if it's a smaller, more incremental increase, it won't feel so hard for you, and it'll be less noticeable to the customers too. So I think the consistency, it doesn't necessarily matter what time of year, but I think it's the consistency of doing it at least once a year, every year, like just reliably.
Yeah, I think that's right. And we, you know, seeing all the data come through our system, spring and summer, very busy for rental companies. We see that most, although I would just say generalize, like a lot of rental companies will update their software in the wintertime and they will raise their prices in the wintertime because that's when they can sit back and look at the business. In the spring and summer, you're just flying around, right? So I generally feel like most people do it in the off season. And the other thing to be aware of course, is like you have a list price that's on your website, and then you have pre-negotiated rates with certain customers, right? So I imagine when you're raising rates, I mean, you have to see the rental owners know the relationship they have with certain customers. Is it fair to say like don't shy away from raising it on your current customers too, right? So if your list price is $100 and your best customer has it for $75, if you do raise by 5%, make sure you do it on your current base and list price, right? As long as you have a good relationship with your current customer, like don't just skip out on your current base, right?
Yeah, exactly. And give them a heads up, right? And look,
Yeah.
everybody knows that your costs are going up. But
Yeah.
as a consumer, you don't want your price to go up, but you understand that that's just how the world works. And nobody loves it, but if you're very upfront with your people and the relationship and stuff, and also like a 5% is much easier to stomach than a 50%,
Hmm.
then I think your existing relationships will understand.
Yeah, if you're transparent about it, you communicate it. You don't just like shock people and they like, why is my rate higher? Oh, we raised your price. Well, you didn't tell me, right? That's feels a little different, right?
Yeah, and maybe if you do it at the beginning of your slow season, you can let them know, like, hey, 3 months out from here on X
Hmm.
one date, we're going to increase the price. Because I think that's nice too, where people can
Yeah.
have some time to like digest it.
Hmm.
Um, yeah.
Yeah, and I think reality is people have become accustomed to it as well. Costco raised the price on their annual membership this year too, but happy to pay it. Um, what's another red flag rental companies are making that are costing them thousands of dollars?
Yeah. So the next one is that your rental inventory isn't paying yourself. And this one really ties with one of the other ones that we were talking about. But where the costs are so large, again, it can be something that on paper, when you've got a booking, looks like it's making money.
Hmm.
But then when you actually pull all those costs together, you're like, oh, shoot, it's not making what I thought it was, right? And also making sure that this equipment is making more than it's costing you. So you can maybe you've got something that's like it's making okay money and you're thinking about it, but when you factor in like the interest and the payments on the equipment, it's not. Maybe we just get rid of it. So I think this is some of the stuff that might kind of fall in the middle where it's like, oh, I don't know what to do here. But when you really pull all the numbers together, you're like, oh, actually, it's not making me money. So maybe I can get rid of that and free up some space and attention and time for those items that do make better money.
Mm. So it's really around looking at the total cost of ownership almost for a piece of equipment, right? And being realistic about that. And it may look better at initial glance, but once you start factoring in all the other costs, you go, it's actually not making me any money.
Yeah. Yeah,
Do you see all?
exactly.
Do you see with rental companies like, are you getting into that level of detail at the asset level, or are you mostly like overall P&L cash flow? I'm curious, like in your experience, are you coaching rental companies to like really get into that level of detail?
Yeah, and we do, right? And we'd love for our clients to add us as a user to their rental software so that
Mm,
we can get in there and pull those reports with them. So it's nice when there's a software out there like Quipli where we can be added and it doesn't cost our clients anymore to add us as a user. But no, we want to look at that data too,
Hmm.
right alongside with them, right? And getting really into it. And I think it's amazing too when you have a software that makes that an easy process versus having to really dig all around, or some of them don't even have it available at all. Like, so, if you're ready to really take your business to the next level, make sure that you can get the data out there and that you're
Hmm.
not, once you get to a higher level, Excel's not going to do it for you anymore, right? You're going to have a software that has these abilities to look at these things so that you can make the best strategic decisions for how to run your company in the future.
Right. And that's why, we talk to a lot of groups around QuickBooks or paper and pen or Google Sheets, which are all great first tools. But like if you have software that's designed just for equipment rental companies, like all of your workflows of like you're adding in fuel for a piece of equipment and you're doing maintenance costs that are streamlined for your operations. Well, that's great for the operations folks. But all that data is then automatically being pulled into these reports where all you have to do is log in and filter your dates and it works. Like that's the great part of like more sophisticated rental software, right?
Yeah.
Also, the great part of what you offer, right, is like you're not just some generic CPA. Like you specialize with rental companies. That's like what you wake up and do every day, right? For 10 years, so you're able to actually coach them and say, yeah, look, any CPA can pull your cash flow statement, which is great, important, but you're able to go at the deeper level. I love that you're getting in the rental software and pulling in like utilization reports and ROI reports. Like that's like when we see groups kind of go from good to great, they're really getting into the data and they're really understanding how the business is performing. And if you're someone who grew up with equipment or you're a first time rental owner, you don't always know what to look for. And there's peer groups and there's coaching available. But like if you have a CPA who you're going to pay for anyways, who also knows the industry, I mean, wow, think about the insights you can find.
Yeah, and our favorite thing is to partner, partner with these businesses and stuff. And
Yeah.
look, I love QuickBooks, and you're gonna have that software too.
Yeah.
But, once you get to beyond maybe operating out of your garage, you need a rental software. QuickBooks can't handle the rental side, right? And so you've got to
Hmm.
have a good piece of software that can manage all of that because like we were talking about earlier, it's such a complicated business, right? You need a software that can handle that complexity and really, make things easier for you and help you manage and run everything.
Yeah. And you have a great rental software with all the reporting too, but like you also need the accounting part too, right? So if you sort of
Yeah.
need both in parallel, and if they work together, great, makes it even easier. So, all right, what's the final red flag here? That costing rental businesses thousands of dollars.
Yeah. So, and this is, I would say, more so a consideration on the tool and equipment side
Uh-huh.
is you're not being proactive with your regular repairs and maintenance on the equipment.
Mm,
And this can get tricky, right? Like maybe you're excited because you've got that ditch witch or whatever, and it's like rented all the time. It comes in on a Friday morning and it goes out on Friday afternoon, and like that thing is just cranking. It's always on rent. Well, eventually, because I think the temptation is right, you can just do those bookings back to back. Eventually, that's going to catch up with you and at a not
mm,
opportune time, most
mm.
likely, right? You're going to have a customer out on the job. They're trying to fire up the equipment. They're trying to use it to do, whatever they need to do, and it's not working. And
Yeah.
that's tricky, because you've
Yeah.
got the operator who now has downtime. You probably pissed your customer off and all of these things. And sometimes that happens just because you're not like planning into your rental system or, like how often that thing can be rented to do all the regular maintenance. Just take care of your stuff, plan that in. Don't be tempted by just having too many bookings back to back. Make sure that you've got that scheduled out and that you're doing everything you can to keep it in the best shape as possible
Mm,
before it goes out on rent.
mm. Well, I'm surprised. I've never heard of equipment breaking down on a job site before. No, just kidding. But some people think that, right? You don't account for the unexpected. Like, I don't know. I think it's a good lesson for life, though, right? Like, you could go to the dentist twice a year and floss, or you can not and brush your teeth and deal with the cavities and whatever. And 3 to 5 years, and they probably happen at the worst time, right? And it's more expensive, by the way, to deal with the problems later on than paying for the ongoing maintenance. Yeah. Another piece of advice, Elliot Vigil came on and he said, he's a sales guy, right? He's a sales coach for the industry. And he said, you cannot pay your mechanics enough. That you cannot pay your mechanics too much money. Like he was like, get the best mechanics you can, pay them more than a fair wage because you get that return tenfold, right? And I think a lot of rental companies go, I don't know, mechanics and preventative maintenance. That seems like a cost item, right? But like if actually done well, it keeps your uptime high. It makes your customers happier, and you end up paying less in the long run for dealing with the maintenance ahead of time before it's an urgent crisis, right?
Yeah. And maybe it's hard to quantify, right? Like, if you're doing all these preventative stuff and you've got those great mechanics and things, you don't necessarily know like, oh, if I hadn't have done this stuff, I would have had a $10,000 repair and like ruin this customer relationship. So you can't really just like look and be like, oh, it's a, if then kind of scenario. I and especially I think if you have a harmed relationship, particularly with a customer that's been really good to you, that's tricky, right? And look, we're not going to say that your equipment's not going to break down or something's not going to happen or that somebody didn't break it,
Mm.
doing the wrong thing. Like that's going to happen too. But if you can be proactive in your business and taking that step back and really managing it well and managing the equipment side of it well, you can mitigate some of that stuff. You can bring that down and make it less frequent.
Yeah. Oh, I totally resonate with this piece as a software person, right? Like the mechanics are our engineers, software engineers, and particularly like the QA quality assurance people. We've upgraded our team here, added to the QA team, and you're like, no, who's going to see it? Well, in an ideal world, like no one sees it. If you have great mechanics, no one's ever thinking about uptime. It just works, right? That's the magic of what you're paying for, and the customer satisfaction, the retention, it just makes your life way easier to take care of the equipment on the early side. And also, when you're buying equipment, making sure you're not holding it too long either, right? There's a certain window to sell it. And it's like the old car, 300,000-mile car, probably going to break down at some point, right? And you want to own that when it gets to that point.
Yeah, yeah. And I was chatting with some guys at the ARA show and they were like, actually, that is our specialty is like having older equipment that maybe is built a
Mm,
little bit differently, but like they were like, we kill it at making sure that this keeps running. Like that was
yeah.
their thing. And I thought that was really cool because that's, not going to be everybody. Um, but if that is, if you've got the most amazing mechanics that can tear out an engine and rebuild it and stuff like that, cool, great for you. But most of us probably aren't going to be like that. But if you've
Mm.
got a wonderful mechanic and team that's doing that preventative maintenance frequently, I think it can go a long way.
Yeah. Well, just to wrap up here, the 5 financial red flags costing your rental business thousands, right? Number 1, bank account bookkeeping. Number 2, not looking at which items are making investment money. Number 3, not raising your prices at least annually. Number 4, keeping rental inventory that's not paying yourself. And number 5, not being proactive on repair and maintenance. If there's any one of these that are you feel like most important for rental companies who are just starting to think about this, is there one that really sticks out to you?
So I would say number one, right? The bank account bookkeeping. Like get into your numbers, get what you can, start looking at it beyond just, how much money you have in the bank. That I think is kind of like step number one. And some of these other things can fall in when you have time. But also when you're looking at, the numbers a little bit more in detail, it's going to trickle down to how you make those other decisions on the rest of the red flag items that we chatted about.
Mm, I love it. Well, Rebecca, I appreciate you coming on. If people want to get a hold of you, the warnickgroup.com. I know you're on LinkedIn as well. I guess final question for you before we wrap up. What's one piece of business advice that you've gotten, great business advice that you've gotten that has shaped your approach to building your company?
Oh, that's a good question.
Weren't prepared for that one. I mean,
Yeah.
not. I used to ask people, "What's the best business advice?" and it puts a lot of pressure. I guess what's one piece of business advice that you've gotten in your life that you go, you think about, and it's been the DNA of the company that you're building.
One thing that we have really focused on the past year that's made a big difference for us is posting our prices on our website was a
Mm,
huge thing, right? I used to do
hmm
all these custom proposals for people and things, and
hmm
it took a ton of time and it was hard to get clients and customers. And so finally, we figured out what would be a price that we would be happy to provide service to anyone, under a lot of different circumstances. And so we put it up there and it makes it easy for our customers to know like, okay, here's where Rebecca's at in the Warnick Group. Like, does that fit in my budget? Does it not? And I think that really translates over to the rental owners, especially in this day of like technology and things. Whatever you can do to make it easier for your customers to buy from you and for them to have an idea of okay, maybe I thought that maybe my budget for this thing was $2,000 and now I see that it actually costs $5,000. Do I need to reevaluate my budget or do I need to look
Mm,
somewhere else or look at a different options? I think that it's been really good for us in our business and we're not a rental store, but how amazing is that for rental stores when they can, allow people to shop their business on the website while they're sleeping. They don't have to have their sales
mm.
team doing all the numbers. I think that that's a huge benefit.
Yeah, I love that. That's actually a conclusion that I came to last fall as well, because we started with online renting, and people need to put your pricing online, and now the rental industry has moved that way. I've seen that from 2020 to now. Everyone is moving that direction. And I was doing a podcast episode, and I was like talking through, and I was like, I actually like at Quipli. I'm telling everyone to put their price online, but we don't have our pricing online. So November 1st, we put our pricing online. We used to have 3 tiers. We have one tier, one price, unlimited users. It's just so simple and easy, right? And that has been huge for our business as well, because it builds trust and transparency. And you're like, look, this is the price that we feel is fair and that like our business can support, right? And if it's too expensive, there's lower options out there, and you don't have to go with us, but like this is our sort of thing. And you put your stake in the ground and you say, this is who we are and this is our price, and we're transparent about it. We're not a car dealership here. That has been transformational for our business too. And I think that's where people are moving. Like, trust, transparency, that matters. So it's encouraging to hear that you've seen that same transformation as well. Yeah. Anyways, Becca, thanks for coming on. Love talking to you. Hopefully, get to meet you at the next ARA show. Although you'll have to fly there and you won't be able to drive down the road in Orlando next March. But it's great to have you on. Appreciate you spending time with us today.
Thanks for having me, Kyle.